Hey, what's going on everyone? It's Griffin here and I hope you're all having a fantastic day as always. Now for today's video, we have quite a bit of chatting to do about the company CloudMD, ticker DOCV up here in Canada and DOCRF down in the United States. Now this is a company that we've actually spoken about quite a bit on the channel previously, but their stock price has been significantly receding down over the past month or so from its peak in October at around $3.20 per share Canadian. Since that peak, the stock has just kept receding down to a point where now it is closed on Friday the 4th of December at $2.08 per share, down an even 35% from that peak in October, which obviously is really substantial. And I have had dozens of requests from viewers on Instagram for a new video about this company, commenting on their recently announced Q3 earnings and really just what my thoughts are about this company moving forward. In fact, out of the dozens of viewers who did end up messaging me about CloudMD, most of them were actually considering cutting their losses and at the very least preserving whatever capital they had left in this stock. Now luckily though, for most of you, if you did end up getting in on CloudMD back when I first spoke about this company in around the August-September range when the stock was trading around $1 per share, then you would still be up quite substantially. But regardless, seeing a 35% decrease over the past month or so in a company that you're invested in is never fun. So let's talk about CloudMD here. And of course, if you enjoy the content of today's video, make sure to give it a thumbs up. These videos take me a ton of time to research and put together, and also consider subscribing and hitting the bell button to be notified whenever I release new and upcoming investing content. So on that note, let's get right into it. Okay, so straight off the bat, as mentioned earlier, the stock is down roughly 35% since October peaks, now sitting at $2.08 a piece, which translates over to a market cap of $336.24 million. So this is actually a really small publicly traded company. When the stock was at its highs, the market cap was closer to the $500 million mark, but nonetheless, this is a small company, so relatively small news and earnings fluctuations can really have an impact on the price fluctuations of this stock. And as it stands right now, roughly 95% of the equity of this company is actually held by the public, meaning retail investors outside of the company and outside of institutions that are holding on to the stock of this company, most of which ended up getting in on this stock over the course of 2020 as this stock, as well as other telemedicine companies, experienced a stock rally driving up the prices of these companies. So it goes without saying that this type of smaller cap growth company that is in a new industry is going to experience significantly more volatility than say a large cap company that is well established in their industry and is part of large funds. Let's also keep in mind that this is a stock that we could characterize as being a Rona stock, like many other companies that operate in the medical industry or others that are highly influenced by the pandemic, where any news that comes out regarding the pandemic has a higher chance of rippling over to stock performance in companies like CloudMD. Even though virus cases are just on a continuous uptrend though, there has been lots of news about a vaccine coming out, and it's likely that a lot of investors are seeing this as a negative for a company like CloudMD that's focusing on developing and scaling out a telemedicine platform in order to complement their network of physical clinics. Now let me just make this clear that I don't necessarily agree with this overall rationale, and I don't think it's all that forward-looking in the next 5 to 10 years, but regardless, this is the type of investor behavior that we're experiencing for a company like CloudMD. So regardless of a pandemic or not, I really just think that this type of company that's offering medicine at a distance is going to thrive over the next 5, 10, 15 years as more individuals are looking to utilize this type of service and just save time. With that said though, I absolutely called these type of price movements for CloudMD and Well Health, in that from their peaks they would recede down a bit, because the way I saw this was that the stock price was significantly rallying at a pace that far outweighed the underlying growth of revenues and company expansion under the hood for these companies. Even though CloudMD was showing a triple-digit revenue growth year over year, which again we'll dive into shortly, well, the reality is that the stock price was at a level where it was trading at 40 times revenue, which is just really high. Just for some reference here, Tesla, which is one of the most shorted stocks in the market and is widely considered to be extremely overvalued, is trading at price to sales ratio around 20.15, which really says a lot about the market price of a company like CloudMD at 40 times revenues. So yeah, at 40 times revenues, I had said it in previous videos that I believe the CloudMD would be seeing a correction, and that in fact fact, I would actually welcome this type of correction because I personally believe in this company long term as the industry matures and this company solidifies their place in that industry, at which point I would probably be buying more. Because here's the thing, yes, it's nice to see our positions go up by say 200% in a calendar year, but investors have now come to expect these types of 50, 100, 200% gains in one single calendar year, which just simply isn't sustainable, at least over the long term. Had CloudMD's stock price just continued rising without seeing this sort of ceiling and correction, it would have reached a point where it was at 50, 60 times revenues, which is just ridiculous. There's no other way of putting it. So we will be digging into their Q3 financials shortly, which by the way, they did have a great quarter, but at a market cap of now around 336 million, this places their price to sales ratio at a level of around 18x, which yes is still quite high for any company, but is significantly lower than 40x. On that note, let's dive right into CloudMD's Q3 earnings to see how the company has been performing from a financial level. Now, the first thing that we'll notice here is that the company actually had a really good quarter with the highest revenues that they've ever seen at 3.358 million, and after their physician fees and cost of goods sold, this left them with a gross profit of 1.4 million, which is a 42% gross profit margin. Now, since same quarter last year, the company has grown by 55%, which for any company is fantastic growth, even though this is quite lower than previous year-over-year growth for CloudMD specifically, which has been in the triple digits. With that said though, it's not reasonable to expect any company to consistently grow at triple digit levels year over year, and 55% to me at least is really healthy growth that I'm happy to see as a shareholder. Now, one element that is quite interesting about CloudMD though is further down in the earnings document where we see the breakdown of the revenue. Even though we typically think of CloudMD as a telemedicine provider, they actually only derived 13.6% of their revenue from the SaaS digital services, which isn't that significant in relation to their entire business model. So really, even though we tend to think of this company as telemedicine over physical clinics, at least, with a name such as CloudMD, that's what you would think, but the reality is that they're generating most of their revenue from this other source, which is their network of physical clinics. Over time though, I really hope and do expect that CloudMD will focus on growing their telemedicine facet of the business so that it becomes a larger portion of the pie in relation to the revenues, regardless of if we're in a pandemic or not. This is really just how I feel society is moving and wants in regards to medical checkups. Last week I had to go to the doctor and it was great and all, but the entire experience was around an hour and a half from leaving my house to coming back to my house after, and it could have been around 10 minutes of chatting with the doctor over the phone or over Zoom. And the way I see this is that even though there may be some resistance for some individuals to hop onto a video call with a medical professional, as more people hop onto this trend and try it out for the first time, I really just feel that there's going to be a growing demand for this. And this is the same reason why Uber Eats is a thing, or why we order things on Amazon instead of going to the store ourselves to buy it. It really just adds an extra layer of simplicity. Now, over the quarter, the company did also acquire two more companies, being LiveCare Health Canada Inc. for basically 1.049 million, and then also South Surrey Medical Clinic Inc. for essentially 648,000. All in all though, this was a great quarter for the company with further growth in revenues and acquisitions of other companies, which CloudMD is really strong on in terms of expanding their business through acquisitions. So here are my final thoughts about CloudMD and their stock having receded down by 35%. First of all, the stock correction did not surprise me in the least. I think that with all of the investor optimism towards this company and the space in general, combined with FOMO, as well as significant future expected earnings already being priced into the stock, once the stock did end up losing a little bit of momentum here, this was really just a catalyst for unleashing a sell-off period for CloudMD. In addition to this, the whole talks of a vaccine aren't helping investor optimism towards these types of stocks, and let's not forget that the company has significantly diluted shareholder value over the past couple of years, issuing out tens of millions of new shares for acquisitions and raising capital, which I really don't love, and that's something that I have mentioned in previous videos. I've also spoken about the fact that they were completely overvalued. There's no doubt about that. And trust me when I say this, I completely understand how it feels as an investor seeing your positions go up by 200-300% in one single calendar year. It's almost intoxicating and can even corrupt our perception of how stocks operate in the market. But let's remember that stocks are portions of ownership of a company, and generally speaking, over time, as a company performs well financially, the stock price will follow. In terms of CloudMD, I really just didn't see the underlying business itself following the same type of growth pattern as the stock did, even though the company is growing at a really nice pace. And with this in mind, do I think that CloudMD will thrive in the future? Yes, I do, as I've vocalized many times in this video and in previous content, and for this reason, just before close on Friday, I purchased another $1,500 worth of the stock. And if the stock goes down even further to below $2 a share, which I kind of doubt it will, but if it does, I'm gonna buy more, because once again, I have a minimum of 5-year time horizon for this company, if not 5 to even 10 years, as this company really solidifies themselves in the telemedicine industry. I really do believe that this will become a multi-billion-dollar company, but I'd love to know your thoughts. Let me know down in the comments whether or not you got cold feet on this company, or if you've lost hope that this is a company that's going to thrive in the future. What we need to consider though, as longer term investors in the company rather than shorter term speculators, which I know for CloudMD there was quite a bit of short term speculation, is how is this company actually going to perform longer term? And in my opinion, I really just like what this company is all about, how they're growing year over year, and I think that they're going to be thriving over the next decade. So to answer the dozens of questions that I received in my Instagram DMs, no, I have not sold off any of my stocks. Personally, I'm still in a position of around an 80% gain on CloudMD. I just went ahead and purchased significantly more, and if it does continue going down, I'm going to continue purchasing more in increments of around $1,000. That's about it for my short recap video about CloudMD and their Q3 earnings. I've had so many requests for this video, so hopefully it was up to your standards and you got some value out of the video. Once again, I'd love to know your thoughts about the company down in the comments, and if you enjoyed the video, make sure to drop a like. It really helps the channel out. Now, if you want to stay up to date with my thoughts on CloudMD and their analysis of earnings moving forward, make sure to subscribe to the channel and hit the bell button. I try to release around 2 to 3 videos now weekly on various different investing topics. So I really hope you enjoyed the video, and I'll see you in the next one.